Hi everyone, and welcome to Tuesday, where we take a look at the performance of the NZSX 50. Now, before I do jump across, I just want to let you know that for the month of March, I have got a Learn to Invest series education up on my website. I will put a link for that below. It's a 5-part series. It's self-paced learning, and it's very elementary, so it's designed for people just getting started. It's going to talk a bit about managed funds. There is a share market simulation in there. It's a lot of fun, and like I said, it's very educational, so I'd love for you to come over, join it, and if you've got any questions, by all means reach out and let me know. Now, before I jump across and share my screen, just remember that today's video is for educational purposes only. Definitely not intended to be personalised financial advice. For that, you do need to go and have a chat to your own financial advisor. Let's take a look. So I have got the NZSX 50 main board up here on the screen, and you can see if I zoom in that for last week, we have had a great positive week. Again, it's hit that all-time high figure. You can see that by that dashed line. It hit it the week beginning the 1st of November, and we've hit it again now. That is quite a positive sign, especially if I look at that candle. You've got a little tail at the bottom. The basis of that candle was a good solid one. So it definitely means that the buyers were in control last week, which is really encouraging, and it's what we want to see. And in fact, the Australian market hit an all-time high last week as well. And so is some of the American stocks. They're sort of up around those higher levels. Yet to see if they break through that, of course. Now let's just jump over to the 1-year chart and see what that's telling us. And you can see that, gosh, there were 2 days last week where we had some really good gaps forming. So that down day was the 23rd, which was Monday, but then the following day, being Tuesday, you can see there that we had a very good gap. Wednesday was a down day, and that can be quite common, if you like, because when the market rallies, quite often people might see that as a time to perhaps start reducing stocks, that sort of thing. So that's quite often when you do see a gap like that and then you get a down day, it can mean that people are out there, they're a bit cautious really, and they're just trying to offload some of their stocks. Interestingly, though, on Thursday, again, there was a huge gap up, but it was a down day. So what that says is there was a lot of buying after hours and pre the market opening. But when the market did open, again, the sellers were in control and they dominated that day. However, Friday, you can see here, and you can also see down by the bottom here, that volume candle. That's quite a good, strong volume candle, which is really positive, really encouraging. Let's go and put on our normal moving averages and just see what they're telling us. So we'll pop on the 30 exponential. And you can see there that the market's certainly trading above that on a daily basis. And we will also put on the 15-day moving average. And if you look here, it's just crossed on Friday. Those moving averages just crossed to the upside, meaning that that 15-day moving average has crossed up through the 30. That is good. We do want to see that continue a bit more, because then that could potentially indicate that the market is wanting to run again. That is really good to see. Let's pop it on the 5-year, and of course it brings these candles up to weekly candles. And again, looking at last week, you can see that it's closed above both the 15-week and 30-week moving average. Again, a really good sign. So it'll be interesting to see what happens here with the New Zealand market, whether it's going to continue rallying or just what it decides to do. Let's take these moving averages off. Now, what I'm going to actually put on is I'm going to make a comparison, and it's the FNZ. It's a SmartShares Invest. It's the equal weighted ETF for the New Zealand Stock Exchange. So what it's doing is it gives a maximum exposure of 5% to some of our top companies. And it also brings up some of those lower companies as well that might only have 1%. It brings them up to a maximum of 5%. Some will obviously still be lower than that. But what I'm wanting to see is, are we having a broad participation in the market, or is this just again, driven by some of our top stocks. And you can see that here, that it is just being driven by some of our top stocks. It's not a broad participation. In other words, not the majority of the shares that make up the NZSX 50 are participating in this rally. You do really, in my opinion, want to see a more of a broad participation. That means you've got more shares involved and they are obviously helping to drive the market rather than just a handful. And if we just go onto the 1 year chart, and you can see that as well here. It's a little bit of a laggard on the daily candles as well. Just interesting to see. I like to just keep an eye on that sort of thing just to see where the market is heading. Certainly last week when I was going through and loading my stop losses, there actually weren't any for the New Zealand market to do, but there was certainly plenty under those Smart Invests shares that I am holding, the ETFs that I chose to move my stops up because they're rallying quite well. In fact, the Australian resource one was a very strong performer for last week. Not advice, just a share that I am holding. Now I'll stop sharing, and if you come back on Thursday, I'm going to take a look at Rua Gold. They were a new listing to the NZSX 50 this week, and it'll be interesting to see exactly how they've performed. But hey, remember, if there is a share that you would like me to review for you, it doesn't have to be on the New Zealand market, it can be anywhere, or if you've got any questions regarding share trading, share investing, reach out. Love to help you and get you started on your investing journey. Until Thursday, take care.